Hello. We are back with another episode of the Space and Defense Market Update brought to you from the New York Stock Exchange. I'm Mo Islam, CEO of Arkaea Media. We are a multi-brand news media firm focused on critical technology. I'm here with my co-host Jack Kerr, Research Director at Payload. Jack, we've been doing this for a couple months, but this month is a little different because we're live.
We are live.
We are live. Okay, so this is our first live show. We're streaming across YouTube, X, and LinkedIn, and we're going to be here for an hour this time, not 10 minutes. So the New York Stock Exchange has very graciously given us a little bit more time. So I can't promise. This is our first live show. I can't promise that there won't be some little bumps, but bear with us because we learn very quickly. But importantly, Jack, I have to ask you, does this mean we've made it?
I think we made it. Either we made it or the space and defense industry has made it, which is the industries are certainly having a moment right now for both of them. But I think the hour-long show is going to be nice. It's going to allow us to kind of go deeper into topics. It'll allow us to relax and get some banter going and get some deeper click-ins. I think it would be helpful to talk about our guests that are coming too. So
yes.
It's a live stream.
Yes.
It is a 60-minute show, and we also have 3 guests that will be joining us in the studio overlooking the New York Stock Exchange. Do you want to talk about, kind of frame up?
Yeah. So sure. So we do have guests this time, which is exciting. 3 guests, and we're going to focus particularly on various stages of the capital markets. So we have Mike Annunziata, who's GP and managing partner of Also Capital. We have Mark Danchak, who's the general partner of a firm called General Innovation Capital Partners, and then we also have Mariana Perez Mora, who's director of equity research at Bank of America. So we have a lot to cover. I don't want to give it all away right now, but I do want to start with some news just for a little bit. I hate to talk about data centers in space again. But just yesterday, we had 2 very big pieces of news from 2 companies on the fundraising side. Let's start there. What did we see? What's your take?
Yeah, I mean, this is a story that just keeps getting bigger and bigger. It's like every week, every month, there's another $10 billion that are out, especially with the SpaceX IPO. We have SpaceX is now reportedly looking to raise $75 billion in a June IPO for this data centers in space play, which is a crazy amount of money when you think about it. Blue Origin just announced its own constellation of data centers in space satellites. Aetherflux, so what you're talking about is Aetherflux, is reportedly raising between $250 million and $300 million at a $2 billion valuation. And StarCloud just announced it raised $170 million at a $1 billion valuation. Which is cool to see, and shout out to their CEO Philip, who for months got bashed on X and LinkedIn for the idea, and finally is getting his revenge with the unicorn status.
Yeah, I mean he's finally gotten his chance to dunk on all his haters, which is awesome to see. I do want to take a quick step back for the uninitiated. Why do we need data centers in space? I mean, there's been a massive influx of capital and interest and news around data centers right now. Why do we need data centers in space? I mean, we're building them terrestrially on Earth.
Yeah. Okay, so I'll just frame it up. There's 3 reasons why you'd put it in space. One is you have 24/7 access to the sun and solar power, which is super important. If AI is a function of energy, you can get it very cheaply in space. 2 is cooling. Cooling, in theory, can be easier. You can radiate heat in the cold vacuum of space. You don't need the bulky liquid cooled chillers that you have on Earth. And the 3rd is the speed to scale. And really, the speed to scale is the whole ball game. On Earth, we see a tremendous amount of red tape, political, pushback, community pushback, NIMBYism.
Yeah.
It is becoming very, very difficult to build data centers on Earth, and it will increasingly become more difficult. So the idea is in space, you don't have NIMBYism, you don't have community pushback. You have to be able to build a big constellation, but in theory, you can put compute online faster, and that the delay on Earth that you have with building data centers, there's a real cost to that. There's a revenue loss for every month that you don't have a data center online.
Yeah.
Could be billions of dollars.
Yeah, I have to say, I mean, maybe this is going to sound kind of strong, but I think anyone who thinks that data centers in space won't get willed into existence is just wrong. I think at this point, the velocity required to build AI infrastructure on Earth, it's simply outpaced every type of supply chain piece to it. Do you agree with that? Do you think that at this point, the demand for compute, the power constraints on Earth, it's just an inevitability?
I don't think it's an inevitability. I think the risk reward here is really good for giving this a shot. If you are able to tap into hyperscaler CapEx dollars, this is a huge boon for the industry. And if it works, it really, really works. Works for the data center companies and works downstream for the rest of the industry that gets kind of elevated from it. There are some risks with it. There's some key assumptions that you need to have for it to work. But particularly if your name is SpaceX, then the economics are pretty obvious at this point.
Yeah, so we're going to wrap up this segment in a second. I do want to talk really quickly. Have you seen Google's recent study on data centers in space? It's something called Project Suncatcher.
Yes, I have.
Okay, so I'm not going to go through all of it, but importantly, they did write that launch costs need to get to around $200 a kilogram for the cost structure of data centers in space to work. What do you think about that? Do you think that's...
Yeah, if you're SpaceX, then you can get the launch cost down to $100 a kilogram. It's the internal launch cost. You can get it down to $100. You can get it to $50 a kilogram. If it then depends on what SpaceX and Starship is going to charge the customer. Is going to charge Google. Is going to charge StarCloud or Aetherflux, and that's a big question. I think it gets into the ballpark. Launch cost is only one part of the equation. The bigger part of the equation is building these satellites at scale. We're talking about tens of thousands of satellites, which is really hard to do.
Yeah.
You have to build them extraordinarily inexpensively, and also, these are big satellites. They require massive manufacturing facilities. How are you going to ramp up a 10,000, 20,000 satellites a year? It's going to be difficult.
Yeah.
But it is definitely an exciting time and worth going after. For potentially tapping into the AI dollars in space.
Okay, so I think it's time to bring in our very first guest, Mike Annunziata, founder and managing partner of Also Capital. Let's get him teed up here.
Mike, how you doing?
Mike,
good to see you.
Welcome to the show. So we just spent the last 6 or 7 minutes talking about data centers in space. So we're not going to talk. We're not going to talk about that.
Not going to talk about that.
We're not going to talk about that. But I do want to talk about you. Tell us a little bit about Also Capital. What are you guys doing? You've made some very. Honestly, you made some excellent bets in the space so far. But before we get into those companies, tell us a little bit about you and the firm.
For sure. Yeah. So I run Also Capital. We're an early stage hard tech investment firm investing across aerospace, defense, robotics, advanced manufacturing. A lot of companies are going to touch the physical and digital worlds at the intersection. We started back in as early as 2019, and now investing out of our second fund, a little over 150 of AUM, primarily first check investors. So we like to be the first believer.
So I noticed on your website you had a very interesting statement. You said that you believe founders that intentionally pick hard problems outperform. Why is that?
Yes. Look, I think if I think about the two biggest bottlenecks to generational companies, it's exceptional talent and ambitious capital partners. The way you attract exceptional talent is by choosing deliberately hard problems.
Yeah.
The best people don't want to work on easy problems. They want to work on really hard problems. Even if it takes 10, 15 years, that's what they want.
So, so tell us a little bit about the stage you're investing in. You're at the seed, Series A. A lot of the time, these investments are not obvious. And specifically, I know you cover a lot of different industries, but let's just kind of hone in on space and defense. What do you look for in a founder? What sort of allows you to write that first check?
Yeah, look, I think it ultimately comes down to people. We like to be insatiably curious, right? How do we learn quickly? How can we partner with somebody who can teach us about an area that's new to us? But most importantly, can that person inspire us that the future, tomorrow will be brighter than today? And we're looking for people that can do that really well. And there's categories like space that lend themselves very well to being inspired, right? Artemis 2 launching tomorrow, going to the moon. SpaceX doing really amazing things. A couple of our portfolio companies doing really amazing things in space. So we really want to be inspired by those people. And super early on, you kind of get that visceral feeling. Once you've seen it, I've been doing this for the better part of a decade now. Yeah. You kind of know it when you see it. The type of person that's just going to take the thing the distance. And we try to find that and double down on it when we see it.
So I want to talk about the companies that you have invested in, because the first time we met, I think it was at our investor summit last year at Happy Hour, and you started rattling off your investments, and it was like one big name after another big name after another big name, and these were all I think seed stage investments. I was impressed, frankly, and maybe you were only telling me the winners and you weren't telling me the losers. But maybe if you can kind of name some of the companies that you've invested in, and then highlight one or two that are doing kind of special things right now in the industry.
Yeah, for sure. I mean, I'll start with the ones that are very relevant right now, top of mind after the Transporter 16 launch yesterday. So we had both Varda Space. We were the first investor there, and I've been on the board of that company since inception, doing in-space manufacturing and hypersonic testing.
Drug development in space.
And also K2 Space, which just launched the Gravitas mission yesterday. So those are two that we were very early in, super excited about. But obviously, we're the very first check into Northwood Space as well, which is doing some amazing things on ground network updating, both for government and commercial customers. AnySignal doing some very interesting stuff on the comms side as well, and some other folks in the kind of the photonics and optical space that's doing a little more under the radar what they're doing there. But we're super excited about some of those. So we've been fortunate to be early in a number of those, and I think the common thread that's really important is have these people done this thing before? Space is hard, right? Missions are expensive, launch is expensive. You really don't want to mess it up if you can avoid it. And it helps to have some experience having done that. And all those teams did what they're doing now in their own company. They did it in a prior professional experience.
When do you think companies are going to drop the space from their names? Because that was a thing in 21, 22.
I was joking. Defense tech companies, their website should all be .prime.
I saw that.
Yeah, exactly. It's funny. We've talked about this. I think it happens over time. This gets into some of my views on hard tech startups, space startups as brands generally. Eventually, right? Varda is not really. It's Varda Space, but it's Varda now, right? I think Northwood was Northwood Space, and now it's Northwood. Right? They've become K2 is K2, right? They eventually become brands when they stand for something bigger than the technology they're building, right? The culture, the ambition, the community they build around their idea, because it's unique and novel and it's inspiring. And when you have those things, you earn the right to become a brand. And I think part of that is dropping the space and just becoming, Varda, K2, Radiant, Northwood.
I think it might be dropping the space and then adding defense after it, because all these space companies are now pseudo defense companies.
How many of your portfolio companies, when you made that first check, defense wasn't even part of the strategy, and now it's a central or at least a significant part of that strategy?
Yeah. I think a lot of them, I think great entrepreneurs go to where the capital and the demand is.
Yeah.
And I think if anybody tries to tell you it's a linear path to massive success, that's probably a big red flag.
Yeah.
It's the people that can operate on the ground and make smart decisions one after another, sound judgment in the face of uncertainty, that are really going to do well. And the market from the defense side grew dramatically just in the last 3-4 years. Just look at Space Force budgets, right? It's up 30+% year over year from last year to this year, something like that. That's a big demand signal that we can go after, because the capability is very unique that these companies are building to serve that growing customer base.
K2 Space. So they just launched on Transporter. We were just talking about data centers in space. They are building very large satellites, very high capacity, high power satellites that now could be used for data centers in space, or could just be, it has hit a trend momentum that maybe 4 years ago when they started wasn't obvious. So maybe walk us through kind of, what the original thesis was for K2 Space and high power satellites before we even knew about data centers in space, or before we even knew that we'll need high power satellites. What was your kind of thought process there when you invested in them?
Yeah, so two things. First, it always comes back to the people, and I posted this earlier today about how there's two kinds of people. There's the what if it works founder who just dreams and says what if it works, and then there's the founder who says these are the risks we want to take in sequence, and if we're right many times in a row, this will be a big company. And if I think about Neil and Karan, the two co-founders of K2, they could walk you through all the different trades that they were making, both from a market perspective and a technology perspective, and the challenging talent they needed to acquire to make this business real. And hey, if I know the path and the risks, I can take the risk alongside them. So I think that's a really important part of it. Just talk specifically about your comments around data centers and space and applications. I can viscerally remember when we were raising the early round at K2 back in 2022, sending the opportunity to a few potential co-investors and saying, hey, I know you've talked about this dream of data centers in space. Funny enough, this company K2 is actually the enabler.
What year was that?
2022.
Oh, 22, okay,
2022, wow. I said, hey, if you think about the dream of data centers in space, just like on Earth, the bottleneck is quantity and speed to power. It's the same thesis in space. So go with the guys that are building the most power at the lowest cost in space, because that becomes the building block that you can't get around. And it makes it really unique, right? I mean, this is a big enabler for what SpaceX is doing too, right? Power, large amounts of power in space, like that's the foundation, just as the same, bottleneck exists terrestrially.
So if you had that thought in 22, have you made any investments in data centers, data center play?
I have not made any new investments in data center plays in space.
Okay, a new investment. Okay.
Very core way of answering that.
Okay, so I have a different question. So you're an early stage investor. We're now looking at, I don't want to call it a mature market, but a lot of the ideas feel like they're out there already. Whether it's Earth observation or it's on the comm side, whether it's on launch or whatever segment of the industry, it feels like there's pretty well-funded startups and companies kind of solving each issue. Do you feel like when you look at the market for new businesses now across either space or defense, do you feel like, wow, okay, like, man, I've seen this already, or like, how are you going to compete with X company? Like,
look,
what cycle? How do you feel about the cycle we're in right now?
I think all the good ideas are done except for our companies. So if you have interest in the category, I've got a couple companies that might be willing to take your investment. Joking aside, look, I think to continue to invest early in this category, you have to believe we're undergoing fundamental shifts in how we allocate capital and labor in the economy broadly. So if you believe there's a fundamental shift from services economy, financialized economy, to a physical economy that's making real things, then you need to be investing in the next wave of demand that is going to come for that. And there's not going to be 5 companies that matter, right? It's going to be the company, there could be a range of companies that can develop the capabilities to actually make real things, using technology, using robotics, using AI, using new software to accelerate and reduce the cost of development of physical systems. And if we're going to be producers and exporters of physical things, either on Earth or in space, that's a really interesting place to be investing over the next decade. What the companies are, like, I'm less worried about that. I'm more trying to find people that have the vision of what the world needs 10 years from now.
So it sounds like to me, it's really at the early stage, it's really a founder bet. And you look, obviously you want to look at the applications, you want to look at the technology, and you want to sign off on that, but it's a founder bet. From us analyzing the industry, it also looks like it's a first mover. Let's just plow as much capital as possible, as quickly into these founder bets so that we can get further away from the next competitor, right? So it's like a founder bet, plow as much capital in as possible, get that first mover, get more moats, which can be capital, and then they will find the technology and they will kind of build, they'll get flight heritage after the fact and build up to that. How much is it? Is that the correct thesis, or is that?
Yeah, I think you're exactly right. The reason why this category of investing, aerospace defense, is different is you can't have a couple guys in a basement hacking at a computer to try to get to traditionally legible signals of business value, right? Revenue, margin, growth, because it costs capital to send a satellite to space. It costs capital to build AI data center infrastructure. It costs capital to make a nuclear reactor, right? If you make it wrong the first time, you have no momentum, right? You can't keep raising. So I think what's most important, the reason why you see a lot of that capital concentration in this category is because people want to get it right the first time. And it's difficult to find people that have a high likelihood of building things right the first time. The people who are most likely to do that have done it already before. If you look across our portfolio, almost all of our founders have successfully taken system level hardware to market in some form factor, right? So the Varda team did the Dragon capsule. A bunch of the early Northwood team did the Capella ground station business. The AnySignal team did the radios at SpaceX, right? You can even look at Radiant Nuclear, right? Doug Bernauer built nuclear reactor designs at SpaceX when he was there and then spun it out to start a company, right? These are not people that are kind of waking up in front of a whiteboard and saying, wouldn't it be nice? These are people that have done it before and saying, the market has shifted, now let's go do it. And it takes some time for the market to understand that, right? It took time for the nuclear story in particular with Radiant to really settle in, but now it's become largely consensus, and Radiant has a huge lead in development with 6 years under their belt, actually taking this thing from inception to go test in July.
Yeah, very well said. Mike, thanks so much for being with us. Really appreciate it.
Thanks, guys.
This is fun.
Good to see you.
This is fun.
Thanks
Come
for having
back.
me.
Do you believe all the good ideas are done?
I don't believe you. I mean, we didn't know about data centers in space like a year ago. So I think this thing will, as platforms continue to build, in space as cost becomes lower, or let's say we talked about Varda,
Yeah.
right? If Varda can now build re-entry vehicles and manufacturing vehicles at scale, then new companies can emerge and build on top of the Varda platform.
Yeah.
So there can continue to be more. How you doing?
Good, how you doing?
Welcome.
Mark, thanks for being with us. Really appreciate it.
It's my pleasure.
Mark, co-founder, general partner of General Innovation Capital Partners here in New York
Yes.
City. Mark, tell us a little bit about the firm.
So we're a $500 million fund investing in growth stage companies at the intersection of deep tech, Western resilience. So that's $20 to $50 million checks in a wide variety of different advanced technology companies.
What categories, from your vantage point within space and defense, have crossed from kind of interesting technology to real company building opportunity? What are you seeing?
Yeah, well, I mean, it's hard to ignore launch.
Yep.
That's, there's going to be an IPO soon that sort of defines that
Yep.
in some ways, and that extends to the next set, which is constellations communications. And those are areas that are incredibly interesting. There's a multi-trillion dollars worth of value being created in space, on the moon,
Yeah.
on Mars, and everything in between. And so but that takes time for it to happen. But what we're focused on is the infrastructure that builds the infrastructure. So communications, intersatellite links, launch is an area that was very interesting to us. Unique orbits are interesting to us as things are pretty crowded.
Yeah.
And so those are areas that we've found value and found interesting things to do.
So you've had a pretty long career. I'm not calling you old, by the way. I'm saying you've had a long career,
There's a little bit of gray.
experienced career.
Yeah.
And you've been investing in deep tech for quite some time,
Yeah.
even before GICP. Did you ever think that the speed at which this would become such a big part of investment, like culture and thesis and focus? I mean, we're sitting at the New York Stock Exchange. I mean, did you ever think that it would happen this quickly?
Yes, it would happen.
Yep.
This quickly slopes have changed so much over the last 10 years and have really accelerated over the last 3 to 4 years. And you're seeing that bleed into everything. I know we want to chat about data centers at some point here. And so the honest answer is no. But the reality is it's here. And we're prepared for it, looking for different opportunities that are there. And I think that this is a lot of technology curves that have been stacked on top of each other over decades.
Yeah.
That are now ready for prime time. Well, the forcing function of economic forces as well are playing into this, and value creation is being recognized by a much broader set of investors, and that's sort of bringing all these headwinds together to put, wind in the sails of some amazing companies.
I think we're banning data centers
about to say
for the rest of the show.
I'm sick
It's
of
a
it.
complex topic.
I'm sick of it. Yeah, no, I think let's talk about the other companies. So you've invested in Stoke is one company that
Yes.
you've invested in. Why don't you talk about Stoke for a little bit, and what the thesis is there?
Yeah. Well, first of all, team first. Andy and Tom and everyone there are just incredible human beings, great leaders, experienced individuals. That's one of the things that we look for in any of the companies that we're invested in. And they're doing something unique, which is the other thing we're always looking for. We think that, as you can see with all of and I know we want to use the word data centers, but as data centers, constellations are going up, we've just seen an explosion in the last 6 months, 12 months in things that have to get to orbit.
Yeah.
Well, they have to get to orbit. And therefore, finding a low-cost way to launch mass into space was something that was incredibly interesting to us. Found an amazing team out of Seattle in Andy and Tom and folks. And we think that they have a very, very good chance to be cost competitive with SpaceX across the board and the other players that are out there in this space.
So there was a rumor, I don't know how long ago, a few months ago, that Mr. Altman approached Stoke to acquire the business. Can you tell us a little bit about that?
That's so interesting. I wish you could tell me about that.
Okay, all right.
Yeah, we are a media news organization. You should have the scoop on that.
Yeah, that's right. I'm here to get the scoop right now.
Yeah.
Okay, fair enough.
Look, it would make sense.
Yeah.
It would make sense for anyone who's putting stuff into space to want to be able to put, especially if you have to put a lot of it fast.
Yeah, if Elon is right that the pace of, you know what, we said we wouldn't talk about data centers.
No,
so I'm gonna
Things that go to space.
Okay, I have a question on rockets, because I have a working theory that in the long run, most of the value in this industry are going to accrue to companies that have rockets. That being a company, we saw that with Falcon 9, enabled the Starlink economics. We see it with Blue Origin launching their own constellation. I theorize that like some of these like standalone satellite companies might eventually get acquired by a rocket company, or a rocket company like Rocket Lab or Stoke launches their own satellite constellation and can they don't have to give that margin away to another rocket provider. What is your thought on that?
I think it's a pretty good thesis, number one. Number two, I think what SpaceX has clearly demonstrated, and it's not necessarily so much the value in the margin side of things, it's the value in the ability to iterate at fast rate and to be able to put things where and when you want to put them. And I would say that you could see that today, I think and we've had this conversation about, is there a bottleneck or is there not a bottleneck? I think there is a bottleneck of getting mass to space. It's only exploding. And if you have the ability to get there, you have the ability to try lots of different things. And one of the things that we really liked about Stoke too is at some point it's going to be interesting to bring stuff back from space.
Yep.
And whether that's for manufacturing purposes or science purposes or whatever it is. And that is a clear capability that Stoke is aiming for.
So let's talk about Starship real quick.
Sure.
So Starship, obviously, once it's operational, it's going to put up a lot of mass.
Yes.
There's a debate, and we've had this debate here on the show, about whether they are going to ultimately launch commercial payloads, because they have so many of their own internal payloads between Starlink and the million compute satellites that they want to put up. Is part of your thesis around Stoke that there won't be really a commercial market for Starship, and ultimately they're going to be focused on internal launches? Because one could argue that one Starship puts up all of the year's needs for non-governmental, non-SpaceX launches. But I'm just kind of curious, how have you fit Starship into your thesis around Stoke?
Yeah. Well, it's a mass mover for sure. And they are still working out some of the stuff, but obviously it's an amazing team and they've done tremendous amount of success across the board. They're also their biggest customer.
Yep.
And if history is any lesson to what the future promises, they're going to continue to be that. And so I think what we see is there's a lot of things that want to get to space. The more things that get to space, the more things that they're going to want to also be there, whether it's for servicing or communications or, it's going to the moon or other things. We think that there's a massive need for that. And the more you unlock it, in some ways, the Jevons paradox, the more you unlock it, the more people want to use it.
Yeah.
And I think that's the case for both Starship and for Stoke.
What is your view on valuations?
It's complicated. We're very bottoms up focus on what we do, but we also respect the top down look at these things because these are blue ocean emerging markets, and I think you have to have both perspectives. We're sober optimists, I would say, in the things that we look at. And it's really hard to ignore the gravity well that SpaceX is enforcing on the entire space universe, let alone the rest of the universe that's out there. And so I think that pulls things in interesting directions. So you have to be judicious when you enter these things. And I think, a bunch of us at General Innovation, we're former entrepreneurs, we speak that language. I think we can have those kind of conversations with entrepreneurs, while at the same time respecting everything that they're doing and finding a valuation that works for everybody on that front.
So right now, how many companies do you have that fit into the space and defense thesis? You have Albedo.
We have Albedo and Stoke at the moment. We're looking at several others.
Where are you? Are there kind of? Are you just looking for sort of the right next founder and team, an idea, or do you have an idea in mind already where you're like, hey, this is where we want to be?
Yeah, I would say we have a thesis around communications. And we think that that is not a solved problem. We've looked at phased array companies, RF-oriented things. We looked at optical intersatellite links, optical back down to Earth. If any of these things that we're not talking about today, the data center stuff, is going to work, you need good communication systems. And that infrastructure doesn't exist today. And the things that are up there today are not working at the speeds you would want it to be. And therefore, and these are decade-long plans that people have, right? So if you don't want to put up a network where some of your nodes of your network are the slowest parts of your network and therefore the null parts of your network. And so I think companies that can advance the technology, advance the scale of manufacturing to be a provider to the industry is a really interesting place. So the thesis around communications is an area that we're looking at right now and spending a lot of time on.
Time for one more question?
Yeah, go ahead.
I wanted to get one in really quickly.
Is it data centers?
It's albedo and
okay.
Earth observation.
Yes.
Because Earth observation has been a market for a long time
Yes.
that has been hated by VC, and it's been thought of as like commoditized market, and it's a capped, there's a capped TAM to it, and a lot of folks have shied away from investing in Earth observation businesses. In the last 3 months with the war in Iran, the need for surveillance and recon, we've seen a boom in Earth observation companies and Earth observation revenue.
Yeah.
Planet Labs is doing incredibly well. ISI is growing tremendously. It's a European business. You invest in Albedo, they kind of pivoted from data to satellite manufacturing. But what is your general thought on Earth observation as a category?
I think you're right in your longitudinal thesis of there are challenges to it, see spiky moments where it does different things. In relation to albedo, what was interesting to us was we were investing to own an orbit that no one's flying in. And the challenge is flying in these orbits, and right, to have a bus with the ballistic coefficient to stay where you want it to stay, and be large enough to be able to have different payloads on it for a variety of different things. And the advantage is you get a time advantage in that your revisit rates are much faster. You get a spatial advantage is that you're much closer to Earth. There's a lot of things you could do with that. And interestingly, you're below the Van Allen belts. And so if catastrophic things happen in space, things in VLEO have a different sort of life cycle potential to it. Sure. And so those were all things that interested us. Incredible team, Topher and AJ and all the lessons they learned over the years allows them to execute on that. And we think there's much more to come in that particular orbit.
So last question, very quick.
Yeah.
Next 5 years, in terms of new capital investment from your firm, are you very bearish, neutral, bullish, or very bullish on space?
Bullish.
So not very bullish, just bullish.
I'm not sure the gradients are that precise, but I think, look, SpaceX is in inning 4. Yeah. Every other company is in the first inning. I don't know whether they're coming up to bat for the first time or they're ending the inning, but that's where things are right now. And so I think that we feel very confident that it's an enormous market. It is needed by both commercial and governments. The more everyone goes up there, the cheaper it is to do things, the more things are needed. So I could bullish.
Awesome.
Bullish.
Mark, thanks so much for being with us.
Yeah, great job, guys. You're building something good here.
Thank you. Appreciate it.
Thank you, guys.
Appreciate
Take
it.
care. Bye.
What's your bullish level?
My
Are you very
bullish
very
level. Honestly, I'm pretty bullish.
Yeah.
I mean, we're sending people. I mean, we'll talk about this later.
Yeah.
We're like literally sending humans to the moon tomorrow.
Yeah.
I mean, it's not being talked about enough, honestly.
100%.
I think I said that to someone yesterday. I was like, "Hey, do you know we're like going to the moon tomorrow?" And they're like, "What do you mean? Like we're landing?" I'm like, "Oh no, we're not landing. But we are going.
You're going to the moon for the first time in 50 years.
moon.
We need like a whole pump up like segment at the end of this. It's just like,
So I feel like it gets a little lost.
Yeah, 100%. How are you? Welcome. How you doing?
Mariana, thanks so much for being with us. Mariana Perez, Mora, Director of Equity Research at Bank of America. covering aerospace and defense. Mariana, do you know you're my favorite analyst on the street?
Oh, thank you so much.
Do you know that I saw this Reddit article that called you the Queen of Palantir?
Okay. I've been called like funny things on Reddit. I
Yeah.
stopped looking at that.
Yeah, at least it's like not mean things, because I'm pretty sure I've been called mean things on Reddit.
Yeah. Hey, but Queen of Palantir, that's a pretty big title, I just gotta say. So what do you think about where valuations and pricing is right now across the market? Right?
So today, when I walk in, everything's green, right?
Yeah.
And you say okay, risk on day, oil prices might come down if actually the U.S. walks away from Iran or that war is ended. But I think it's important to have everything into perspective and look at where are we year to date. And if you look at that, defense primes are up 20-25%. And that compares to the market that is down 5%.
Yeah.
And it's not all related to the Iran war, because this started end of last year, beginning of this year, and it was about the sentiment of, okay, there is global demand for military assets. We need to recapitalize all these industries around the world. And the reality is the American companies are more ready than everyone else. There is also this understanding of this might be more sustainable than before, because we ended up with a budget that was about $1 trillion, but how much of that was just the reconciliation bill? How much of that was actually a one-time versus a new normal?
Right.
When Trump at the beginning of the year says, I might actually go for 1.5 trillion. That is actually a big number. And we might not end up there, but that sends a signal that about $1 trillion might be the new normal. So that is what actually is driving most of the defense primes that were actually trading at the lower end of their historical relative valuation to the market to the higher end. And the reality is that a little bit of the companies that have growth have derated to the primes because of this dynamic. But most of the upside on the primes so far is not from an estimate, change in estimates and faster growth. It's still valuation. And it's a sentiment of okay, this seems real, this seems sustainable.
Where are we seeing, so within the space, where are we seeing premium valuations? What companies are trading better than others and what's driving that?
Still growth.
Okay.
People are chasing growth.
Yeah.
And part of what I said before on the primes not being able to turn that excess demand into higher estimates is because it takes average 3 years from a budget getting appropriated to actually flowing down the system.
Interesting.
But if you're a smaller company, you are more nimble, you are by design, designed to be more agile, you might be growing way faster. And that's where multiples have gone through. New entrants, nimble companies, software-driven solutions, or even down the supply chain, the ones that are agnostic to programs, so they can actually benefit from this economies of scale. That's where most of the growth is what people are chasing still.
We haven't seen a lot of defense tech companies go public yet. I think there's also this I think Anduril sort of everyone's waiting for, and someone could come before them. But on the space side, we've seen tons of companies, right? And just most recently, we had York, we had Firefly, we had Voyager. From your vantage point, some of those companies are trading well, some aren't. But what do you think these companies are ready to be public businesses?
I think the most important thing, and we have discussed this through all your events, is are you ready to have credible goals? Are you able to actually have visibility into where are your milestones, how are you going to execute? And that goes from program-specific execution to do you have an M&A strategy, or when and how you're going to become profitable. That's the thing. Many companies, especially with the SPACs, they came and took advantage of a really good market opportunity. But what happened is there was a bifurcation between the ones that were able to have a clear path towards execution and the ones that were just not ready for that prime time and actually reporting quarterly and trading daily and all those challenges.
How much do you look at cash flow? Because Mo and I are
cash flow?
Cash flow, yeah. Mo and I are ex-bankers, and at one point we were running DCFs and cared about cash flow. Now we don't and can't. In fact, a lot of these companies it seems almost like positive cash flow or telling a more realistic story is a negative to a stock or a negative to a business, and it's better to tell this ambitious story about this massive market cap and raise a ton of money and to kind of have that Mars or Moon dream for whatever company. So I guess when do you look at cash? When is it time to look at a company's cash flow when you're valuing them, and when is it time to look at the broader story and maybe more of these like intangible execution milestones?
The fundamental answer to that is a combination of both, right? What is the market you're trying to attract or target? What is your strategy? And then does your business model make sense when you get there? Or like, can you actually make sense out of that business model without like capturing like 50% of the market, right? Like all those things are important. I think today, what people want to see is like mostly growth, because there are so many opportunities to actually have private capital flow into creating new opportunities and all these things that then you have to balance, okay, when is the right time to become profitable? When the companies become public, I think it's important to have a path to how you're going to be profitable, how profitable you'll be whenever you're profitable. What do you need to have to actually be that guy? And it's usually 2-3 years is a good number, but like it all depends on like how credible is your story. Because part of the story, what you say about the space companies and many companies that came public without being ready, is once you lose the trust, it's really hard to get back.
Yeah.
Interesting.
So let's talk about SpaceX for a second, because you and I have talked about this before, at what the downstream effect of that IPO is going to be, right? So we don't have to talk about the IPO itself, but I'm curious, like, what do you think that the kind of market reverberations around SpaceX are going to be?
I do think it's going to be like pretty significant, because space in general has been such a niche-y market for investors that they weren't focusing on the space economy and what that meant and how large were the opportunities or not. With one of the pretty largest IPOs ever, people will have to pay attention to what's going on in space. And as you prepare yourself for what's going on in a market, you start to understand all the players in that market. So I could imagine like the space companies, and we have already seen some valuation premium to that effect, but the real money might start to flow after the IPO is out.
You mentioned once something to me that kind of stuck with me when we talked about this, which is transparency. You mentioned that one of the impacts of this could just be like companies are now forced to be more transparent. What do you think about that?
Yes, like that's the thing. They'll be forced to be transparent on like competitive dynamics, milestones, how they execute, what programs they are exposed to. Again, you're going to be facing an investor base that will be more prepared on what are the opportunities and how much market share you're having or not.
I want to get into specifics about companies. Is there a company at the current price today that you like? And is there a company that you particularly don't like?
Now we're getting some stock.
We want it. Come on.
Here, let me pull up my
I
Fidelity.
know. You're going to see the ticker change immediately up there.
Where you started, the Palantir, I like it a lot here. I'm telling you guys, like, there's going to be...
down, I think, 30% off its highs
I know, but like their estimates, and like if you look at consensus, doubled for 26 and 27. So their numbers, their fundamentals are improving meaningfully. The entire backdrop for like defense spending, government spending on these things is really good. They have like Maven that became a program of record. They have ShipOS where they are going to help the Navy like do the submarines build up. And most of the stock price down is like related to this like SaaS apocalypse, right? And like the entire like software coming down because of AI. And I don't think they are like threatened by AI, because if you're actually going to have like swarms of AI agents operating by themselves, you do need like a roadmap and a data operating system to operate. So I'm pretty positive on the commercial side as well.
She's not getting out of the company that she doesn't like. The company that you don't like at these valuations.
I'll be cautious. I don't want to like pick on a name.
Okay.
I'll be cautious about companies that are transitioning from like program like R&D things into programs of record. That is challenging. And if they were not like transparent enough of what are the milestones and things like that, I think there's going to be many investors that could be surprised on like what is under your portfolio and like how strong and robust is your growth.
Yeah.
We need to get like a whiteboard out to try to map out who she's talking to.
You're asking a highly media trained investment professional.
I know.
Like,
She's good.
She knows what she's doing.
Yeah.
Last question, Mariana. So a lot of what's happening in the, I will say, defense tech community is surrounding the administration. And there's a culture, obviously, both on a cultural side and also on the BD side. What do you think will happen if there's an administration, or I should say maybe an administration change, but let's just say a party change for the next election cycle? I don't mean the midterms, I mean the next presidential cycle.
Okay, so I'm going to touch base on both because the midterms are actually meaningful.
Yep.
We have done this analysis, like actually like running through like roll call votings and like how like who has the majority in the Senate and the House. And the most important variable is usually the Senate. So far it looks like the Republicans like are biased or like to retain the Senate. But if they weren't, things could actually get like more difficult to actually get those budgets passed through the Congress.
Yeah.
On the House, what is interesting is data or our analysis shows that a Democratic House is actually better for defense spending than a Republican one.
Yeah.
So if we were to see that switch, that is the expected one, that could actually be positive. And then from the presidential one, honestly, I think most of these changes we're seeing, pro-agile, commercial, faster, attritable, software-driven technologies, they started under the prior administration.
Yeah.
Or all these like cutting red tape type of dynamics. It started before.
Yeah.
This administration actually accelerated those efforts. I do think that no matter who wins the next presidential election, this is a momentum that will be really hard to stop.
Yeah.
Because it's pro-efficiency.
I agree with that.
So in that regard, I'm positive. How long we are going to be under a continuing resolution, that I think is the new normal.
Yeah, fair enough. Mariana, thanks so much for being with us.
Of course,
I
thank you
appreciate
so
it.
much.
for coming.
It's great to be
Thank you.
here.
Thank you. So we have a lot of other things to talk about, but not a lot of time. So what should we talk about? I mean, okay, so we have Artemis. By the way, that was fun.
Yeah.
Mariana's great. Great. And so is Mark and Mike, of course. I mean, we have Artemis coming up. There's been some. I mean, we have a few minutes. Maybe we can talk about the NASA changes.
Yeah, sure.
So let's go through some of NASA's new plans really quickly. So, I mean, this is very, very significant, right? Just last week, Jared Isaacman, new NASA administrator, announced that NASA's reworking how we're thinking about the moon. So he mentioned that the U.S. is going to start launching crewed lunar missions twice a year, starting with Artemis 6. And he wrote, America will never again give up on the moon, which I think is interesting. The Gateway program, which is supposed to be sort of like the space station-esque infrastructure that was going to be orbiting the moon, they've scrapped that for a lunar base. So we're now building a at least in the beginning, semi-permanent, eventually permanent presence on the moon. And I think the other important piece is that like CLD, so the Commercial LEO Destinations Program, so the program around space stations, which NASA was going to fund a couple different space stations, have now that looks like in disarray. They're not really sure if that's going to work. They don't, they're completely scrapping and reworking that. That's caused some heads to spin both on the government side and also with a number of these very well-funded commercial station providers. So any kind of thoughts on
I got two thoughts there. One is it's definitely an all-in move to the moon.
Yeah.
NASA and Jared Isaacman see.
Have we given up on Mars?
It's not giving up on. It's not giving up on Mars. You do moon first, and then you go to Mars.
Yeah.
And Jared Isaacman clearly wants NASA to be this inspirational organization again, and to do that, they want to accelerate industry all in on the moon. Which I think is great. And we used to joke about the cislunar economy and how, like, what is the cislunar economy, and is there actually a commercial organic demand in cislunar? Probably not like commercial, but there's definitely some serious government dollars going into it for a long time. The CLD thing I worry about, and I don't particularly like. I mean, you have to give investor bases and companies some continuity
Sure.
throughout the life cycle of NASA signals. And the CLD, Commercial LEO Destinations, is a big, high-profile program. And I wouldn't say it's in disarray. I think it's just being changed and being looked at, and there's different proposals. But I worry about whiplash at NASA and the industrial base with changing kind of outlooks on what we're going to prioritize.
And it's significant, right? I mean, NASA's effectively saying, like, we don't really want, I mean, they're alluding to the potential of not wanting a free-flying station, which means that they want modules to connect with the existing ISS, which is going to be deorbited kind of in the early 2030s. So it is a potential meaningful change in strategy, which is going to have like pretty significant impacts on these companies, two of which that have just raised substantial amounts of investor capital on equity and debt side. Okay, Artemis is tomorrow, we hope, knock on wood. How do you feel about that?
I'm pumped for it. It's like I feel like we need like confetti and balloons in this studio. You know what we should have done? We should have bought like Halloween astronaut costumes and wore it today to get people pumped. But we are going back to the moon tomorrow for the first time in 50 years. We are going around the moon. We're going to circle it. It's going to kick off the true Artemis program, and it's going to kick off and light a fire under industry. It's going to hopefully bring NASA back into the glory days. I think industry is ready. I think industry is ready not just to go around the moon, but to land on the moon, to create a base on the moon, to create a permanent base on the moon, to inspire people again. And tomorrow it kicks off 7 p.m. Let's all tune in, go to your local bars, have a couple drinks, and let's celebrate again.
What time? Do you know what time the launch is?
I think it's around 7. Yeah.
Okay, awesome. Yeah, I mean, pretty spectacular. I mean, I think that I do think that kind of the seminal moment for the world is going to be when we have boots on the ground again, and the next generation sees, those are going to be the heroes like the Apollo and the astronauts were, and what that's going to inspire for new STEM graduates and just how people are going to perceive space and its impact in space. And you're still going to have the people who are going to be like, did we really go? Like, that's a great Hollywood studio there. I still get that. But I'm just phenomenally excited and phenomenally I'm just excited. For what's in store for. I mean, I hate to be romantic about it, but but what's in store for humanity? We're here at the exchange, and we asked Mark earlier. Would we? He kind of said it a little bit more eloquently than me, but I would say that never in my wildest dreams would I've imagined SpaceX going public now, and the level of interest and demand for capital, or level of interest and demand for these companies, and there just seems to be a pretty limitless source of capital now for all these companies who are building these amazing technologies. Yeah,
that are real. It's definitely a special time.
Okay, so we're going to be back here next month. So next month, the New York Stock Exchange is hosting a space summit. So we will be back live. Instead of investors, we're going to actually talk to a bunch of executives. It's going to be a very interesting conversation. We're going to try to limit the data center talk, but I can't promise that because Philip's going to be in town from StarCloud, and I know he wants to be on the show and talk about all the great things that they're doing. But that is all the time we have for today. So we want to thank all of our guests. We want to thank you guys for listening and watching our very first live show. I know there probably was a little bump here and there, but I appreciate everyone sticking with us. But that is all the time that we have for today. Hope you enjoyed the show. See you back next month. And please don't forget to sign up for our newsletters. That's Payload. It's our space publication, www.payloadspace.com. And then Tectonic, which is our defense publication. That's www.tectonicdefense.com. Until next month. Thanks, guys.